Okay, time now for the Keiser Report. I'm Max Keiser, and checking in from Connecticut is Stacy Herbert. Stacy Herbert, can you hear me?
I can hear you, Max Keiser.
Lots going on. Let's get right to it. Hit me with a headline.
Well, first, Max, I have to tell you, the FBI might walk in at any moment because I am in Connecticut, and there are raids going on all over the place here. All the Connecticut hedge fund guys apparently have been, you'll be shocked at this, Max, but apparently they've been manipulating markets and insider trading.
Yeah, right, of course. The big headlines are coming out that the hedge funds are involved in insider trading and market manipulation. The funny thing is that to report the kind of returns that they've been reporting, the only way you could do that is by trading on inside information. By definition, what they do is trade on inside information. Of course, Goldman Sachs' Lloyd Blankfein will say, well, he calls it making a market. That's a euphemism for breaking the law. Now the SEC and others are coming down on these guys, but I doubt it'll be more than a slap on the wrist and a small civil fine. I don't think we'll see anyone.
It's not true because it's not the SEC investigating this, and it's not a civil matter because it's by the very nature of the fact that it's the FBI raiding offices and subpoenaing people. That's a criminal matter. It'll be a criminal matter.
Very exciting. So you're in the thick of it. Greenwich, Connecticut, of course, is one of the big hedge fund capitals of the world. The FBI is crawling around looking for bad guys. And so how's the feeling in there? Do you feel like the hedge fund managers are hiding under their desks or they're seeking asylum in foreign countries? What's it like?
Well, that's a very curious thing about this is that, I watch the local news every night here, and there's nothing at all about this on the local news. There's nothing at all, by the way, but about how many people are now camping out in line for Black Friday, the day after Thanksgiving. So that is the only story that has been in the news. Nobody's talking about the hedge funds. Nobody's talking about this headline, Max. China, Russia quit dollar.
That's right. China and Russia are now involved in a big currency swap. They want to get out of the dollar. They want to do deals outside of the U.S. dollar as reserve currency. This, of course, will put big pressure on the dollar. I notice now that China is no longer the biggest buyer of U.S. government bonds. Japan is no longer the biggest buyer of U.S. government bonds. The U.S. government is now the biggest buyer of U.S. government bonds. They are smoking their own belly button lint in an attempt to keep the charade going just a few more quarters longer. And you've got those shoppers, they are camping out, waiting to get themselves deeper into debt. It's kind of like, getting a news from some farming state. They have the state fair every year, and they've got the prize pig. Here you have some prize shoppers who are going to engorge themselves with more debt on stuff they can't afford, manufactured overseas, to reduce their labor ability to get good wages even more.
Well, that's correct. So the first paragraph of this story, Max, reads, China and Russia have decided to renounce the U.S. dollar.
Well, there you have it. Who would want to do business in the U.S. dollar? The currency is a toxic currency. It funds all the wars. It funds the invasion of Afghanistan and Iraq. It funds all of the TSA agents that are crawling around airports, sticking their hands up people's keisters, looking for gold rings, I guess. It's a toxic currency. Nobody wants to be in the dollar anymore.
So I was also reading this Time magazine right here. And there's an article about the the mortgage crisis and whether or not it's a crisis. And here's the article, Max. The case of the missing mortgage. Lost documents are leading to contested foreclosures, slowing the recovery. This is what Time magazine found. Now, in this one bit, they talk about Washington Mutual. Well, it turns out that they've lost 100,000 files for mortgages. And the reason why is because in early 2007, WAMU shipped 1 million loan files from a document warehouse in Houston that it was shutting down to save money. The documents were supposed to go to Juarez, Mexico, where all those people are being gunned down. Well, according to local reports at the time, WAMU lost track of 100,000 files during the move to Mexico. Hasta la vista.
Yeah, they were going to send him to Building 7 down there at the World Trade Center complex, but of course they blew that one up. They couldn't send it to Building 7. They already took down Building 7. As now even newscasters in the U.S. are now tacitly admitting the fact that that was a controlled demolition. So they sent him to Juarez, Mexico. Of course, that would make sense for Washington Mutual, which is now part of the whole Wells Fargo conglomeration of money launderers and drug.
Max, that's Wachovia. Wachovia is out of that business now.
Well, it makes sense to be close to the source of where you're getting your drug, money to launder. Whichever U.S. bank is the bank du jour to recycle all that drug money. It's hard to keep track.
And then the other headline, of course, that isn't really making news, but here on the Keiser Report is the bailout of Ireland, 85 billion euro fund for banks and public finances. So the EU and the IMF will offer the government of Ireland an 85 billion euro facility. We all know this, but of course this isn't really being discussed so much on the news here. And a big funder of the IMF is, of course, the United States.
Well, where are they getting the money from?
Where's anybody? Yeah.
They're broke. The IMF and the World Bank, they have no money. All they're doing is they're taking control of this country's debts and they're repackaging these debts as more debts, except that the interest will be due to a world organization instead of a sovereign country. This is how they're going to destroy the sovereignty of Ireland, Greece, all these European countries. They crash their economies. They come in, they roll over all the debt, refinance all the debt in terms of World Bank and IMF debt facility, and now all that debt is owned to these global institutions, so Ireland loses its sovereignty. But they're not being given some kind of relief or cash because the IMF is broke. The IMF doesn't have a penny. As you say, it's mostly the U.S., and the U.S. is $60 trillion in debt. They have no money. It's just an accounting fraud. It's IMF accounting fraud versus Allied Irish Bank or Anglo-Irish Bank fraud. They're swapping one fraud for a new fraud.
There's another headline on this, but as you mentioned, Allied Irish Bank, there was an interesting little note here, is that while the authorities are reluctant to fully nationalize AIB, it will need significant new funds. One option is that the state will be left with a 99.9% stake in the bank. There's 0.1% that's not, that's private. And that, of course, Max, is where all of the good stuff stays.
Right. Well, it reminds me of the mortgage-backed securities markets, which they sold toxic loans to banks around the world, but they put in 1 or 2% of U.S. government AAA-rated bonds, and then Moody's came around and said the whole thing is worth AAA based on a minority of the securities being U.S. government bonds. And on that basis, they were committing massive fraud enabled by Moody's, S&P, Fitch, all the rating agencies. And by the way, these rating agencies are now coming into Ireland and downgrading their debt. And they're saying that if you hold an election in Ireland to try to get a new government in place that might not be friendly to our embezzlement, we're going to downgrade your bonds. So now the Moody's is involved in financial terrorism openly, without any fear of retribution by any government, because they own all the governments.
Well, and of course, who's paying for the banking fraud crisis in Ireland? Ireland austerity plan to cost Irish households £3,000. Now, this is just in taxes and new taxes, which will be introduced to all the way. Everybody will now have to pay taxes, even very low income people. So up until now, 50% of the population didn't even have to pay taxes because they earned so little, but even they'll be taxed. But
yeah, wait a minute. If you're charging people tax who earn no income, that's not a tax, that's indentured servitude. That's not a tax regime, that's a slave regime. It's so sad in Ireland. I saw a report a few days ago that even the horses in Ireland are dying off from starvation. Here's a country that, they love their horses and their horse races. They can't even afford to keep these animals alive. They're running around the countryside and starving to death. I mean, this is the state of Ireland today.
Well, of course, in the article, they're saying that no matter what, though, the Irish government doesn't want to cut, to raise the taxes on corporations. They have the lowest tax rate, or if not one of the lowest tax rates in Ireland, in Europe.
Oh, that's right. They don't want to discourage the corporations and the banks who totally destroyed their economy from leaving their economy. Why don't they just invite, like Charles Manson, spring him from jail, have him come over to Ireland and become finance minister? I mean, that would make sense.
But Max, the fact is that a lot of those corporations benefiting from what is a 12.5% or 15% corporate tax rate, they're actually American corporations like Google, which are just funneling basically their tax heist of the American population.
Exactly. If you want cheap labor, go to China. If you want to pay cheap taxes, go to Ireland. If you want to have a lax regulatory environment for your environmental crimes, go to some other territory. So these corporations, they don't exist on behalf of any one region or country. They're merely fractions of a corporation that are held together by one common theme of fraud.
And Max, finally, I have some headlines here that I noticed. Silver shortages accelerate as wholesale supplies plunge. Keiser 1, JP Morgan 0.
That's right. Zero Hedge picked up on this. The wholesale market for silver is dried up because of the campaign to decimate JP Morgan by exposing their multi-billion-dollar silver position that they're holding short on their books. Every penny of the price of silver that goes up, JP Morgan comes closer to being extinct. And I liken this to that scene in Star Wars. Remember when Luke Skywalker, he's flying into the Death Star, and he has to hit that exact little spot in the Death Star to explode the Death Star. That little spot is the vulnerability of the global banking system. That's the one little spot that holds together the entire global banking system. If that were to explode and the price of silver go to $50, $60, $70, then JP Morgan and the US government and the Federal Reserve Bank in Washington explode like the Death Star in Star Wars. So we all must let the Force guide us. Let the Force help us in getting the price of silver to $50, $60, $70. So we put the Death Star of JP Morgan out of business, Federal Reserve out of business.
Well, speaking of Death Stars and stuff, Max, I want to cut to a few little videos. We've had this viral video campaign. We've had, I think, close to 100 videos now sent in, at least. And here's some pretty crazy stuff here. Here's the morning coffee. I'm not sure. It looks like a superhero with a bar of silver. Here's another one from Andrew Bisu with a scene from Silver Apocalypse Now.
This is PBR Street Gang. We request airstrike mission. Coordinates AG47. Crash JP Morgan. Buy silver. Over.
And here's one from Greenie44.
I don't like you, 'cause you wanna control me. You're an evil control freak.
So, as you see, your campaign is spreading across America.
Oh, it's all over the world. And we're getting now videos in many different languages. This is a global insurrection against the banking occupation. For those countries that have not yet been terrorized by the banks on Wall Street, it's still a good time to start buying your silver. Go into that little vulnerable spot in the global banking system that JP Morgan's short position in their silver on the balance sheet, explode that, and the whole thing comes tumbling down, and freedom shall reign. Stacy Herbert, thanks again for being on the Keiser Report.
Thank you, Max. I'll keep an eye out for these hedge fund managers. You never know if they're in the backyard or anything.
Yeah, just if you see one, whack them. All right, that's going to do it for this half of the Keiser Report. Stay tuned, much more after the break, so don't go away.
Hungry for the full story? We've got it firsthand. The biggest issues get a human voice, face to face with the newsmakers on RT.
Hi, and welcome back to the Keiser Report. I'm Max Keiser. Time now to go to New York City and talk with Paul Mladenovic. He's the author of Stock Investing for Dummies and of Precious Metals for Dummies. His website is called ravingcapitalist.com. Paul, welcome to the Keiser Report.
Oh, glad to be here.
All right, Paul, in your book, Stock Investing for Dummies, does it cover in the book some of the action we've seen in terms of market manipulation and insider dealing and lack of regulation? How does the average investor navigate through a market that's so obviously corrupt?
Well, this is basically with the futures market. I'm a great proponent of telling people that they should be buying bullion, among other things, because that's hard to manipulate the bullion. But the prices that were in question is something that's been going on in the futures market for a number of years. And a lot of it hit its pinnacle in the year 2008, when several large firms, now allegedly, I have to say allegedly, were going short something like 138 million ounces of silver in 2008, which caused the price of silver to fall drastically. And this is where the issue has been when people worry about manipulation or if markets are free enough.
Okay, so in the precious metals markets, with these pending lawsuits now against JP Morgan and HSBC, the whistleblower Andrew Maguire in London testifying about rampant manipulation, and the hedge funds now around the world sent blood, and they know that if Morgan and HSBC are forced to cover those shorts, it'll cause a huge short covering rally in these markets. And but getting back to the stock market as a whole, though, I mean, the stock market, the cash market, the New York Stock Exchange, it's still dominated by high-frequency trading, program trading, algorithmic trading, which are fraud. It's still fraud. The average investor, how do they navigate around the obvious fraud? I mean, Goldman Sachs admits to the algorithmic trading and the high-frequency trading. They admit to their fraudulent behavior. How does the average investor get around this, or does it just go with the flow?
Well, no, you don't go with the flow. The bottom line is, what is the stock market? Is the opportunity to buy stock at a particular price, and you're buying participation in a particular company. For me, I was never that worried about how these large players and these potential practices came into being, because if I bought a company that had great value at a price I was buying it at, in due course, it would do well. When I saw whatever happened the last couple of years, I did an evaluation of all the stocks that I remember telling my students about and my clients about many years ago, the ones that I thought were good, solid companies at decent prices. Where are they now? Look, 5 years later, most of them are up triple digits. See, a lot of that stuff with the manipulation, that might cause, warping of the price in the short term, but it tells the average investor that they have to go to the fundamentals. If it's a solid company, solid profits, and you're buying at a price that's a decent price, in due course, you will overcome even some of this, questionable activity by some of the larger entities.
Okay, so value investing over time gets you a decent rate of return. Certainly you've got stalwarts of this approach with investors like Warren Buffett proving the value approach. But over the longer time frame, we are looking at a situation where the stocks that you're talking about, of course, are priced in dollars, and the U.S. dollar itself is being attacked with all this quantitative easing and Fed printing of money. And so even if you're up 100%, if you're up 100% in dollar terms and the U.S. dollar crashes, as many argue that it is crashing, you're still left with zero at the end of the day. Are you also looking at some of these other are precious metals the only way to hedge against a falling, crashing dollar, or are you looking at stocks in other countries as well?
Well, I think select stocks and ETFs, I think, are still very strong in spite of what you mentioned there, because as long as they're tied to things, see, I've been telling my clients and students in recent years that they should only be considering stocks and ETFs in those companies and sectors that are tied to human need, because this is what's going to overcome a lot of this. And a lot of those industries have an easier time mitigating things such as the inflationary impact. And for me, I tell people to buy gold and silver, among other things, because look, bullion is an important diversification away from paper assets. I think that the last few years, you've seen the trouble with paper assets. Look, any paper investment can go to zero because it's based on somebody's performance, like a company, or somebody's promise, like a bond, and even currencies. Those are paper assets. Those are based on what? The promise of a country, right? Because a currency is much like the stock of a particular company, a country, so to speak. And so for me, bullion is a way to diversify away from the risks of paper assets. And so for me, I've been telling my clients in recent years things that I would never have imagined telling them, 10 or 15 years ago. Like, for example, buying extra assets that they keep. For example, running a pantry. Would you believe it? Telling your financial clients that they should be having more things that have residual value, like of all things, a pantry that has like things like cans of soup in it. Only because, look, if there's going to be problems with currencies, you want to still be able to have those things that's going to retain their value a few years from now. As I told my students the other day, look, what do you think is going to have more value a couple of years from now? A can of soup or a dollar bill?
This is really remarkable because we've come full circle from what Peter Lynch used to advocate. He said, if you love Campbell's soup, buy the stock. Now what you're saying is, if you love Campbell soup, the stock, buy this soup actually off the store shelf.
Well, do a little bit of both, actually, because that's diversification.
All right, so I would imagine in this portfolio would be stocks that relate to human need, as you call it. So that would be food, and then you have stocks in food, but you actually also have stocks of food in your pantry.
Well, for me, when I say human need, see, you see how bad the economy is. And I think that if you're adequately represented with the statistics, we're not in a recession, we're in a depression. It's when you see the real measure of unemployment, it's really in high double digits. And so for me, when I say human need, think about the things that people will buy no matter how good or bad the economy is. People still need food and water, energy. And by the way, because of the way currencies are being overinflated in recent years across the globe, I think that precious metals are also human need because it's a store of value that all of us need if we're going to be able to maintain our prosperity.
All right, let's talk precious metals here for a second. Many folks are arguing that, or have saying that the gold standard is what caused the depression. Talk to me a little bit about this.
Well, if I heard you correctly about there were some people who said that the gold standard caused the Great Depression. Usually public, I'm very measured in my words, but I can say that is probably one of the most ludicrous, stupid, destructive, fraudulent things I've ever heard said. The gold standard and gold, it had nothing to do with the Great Depression. Depressions are not caused by something like gold, or it's not caused by a free market. It's not caused by consumers and producers. Every depression in world history was caused by systematic blunders by the government. So for me, I'd love to be able to sit down with these people who have these misconceived notions about what gold does. No, gold adds a responsibility to the realm of money, of currency creation. If you can limit that, then you will limit a lot of the things that end up causing it. Look, I was born in a communist country, and it was Yugoslavia, and I left when I was 4 years old. And the communism is the closest thing you can come to a permanent depression and permanent oppression. And in 1989, they decided to do their own stimulus. In 1989, they started to print up trillions of dinar. And what did that do? Caused one of history's worst hyperinflations. And so the thing is, if they had the gold standard, they would have had a hyperinflation. And that hyperinflation led to economic disintegration, which in turn led to social disintegration. And finally, Yugoslavia collapsed into chaos and civil war, and it was no more as of 1994. So this notion about the gold standard causing the Great Depression, it's like blaming seatbelts for a car crash. It's insanity.
Well, I guess the argument is that gold is a limited supply, a limited commodity. Therefore, you are artificially limiting the growth of the economy. Whereas if you're not using a gold standard and you're using a fiat currency standard, you can then create layers and layers of debt, which presumably are going to increase your GDP. And this is exactly what has been attempted, but it hasn't worked very well, has it, Paul?
Well, here's the thing. If I heard you correctly about people thinking that somehow growth is tied to the money supply, no, here's the thing. If that's the case, we all know what happened in Zimbabwe during the recent years when they hyperinflated their currency. Can anybody argue that was a growing economy? No, it was a socialist rat hole where people suffered tremendously. The government horrifically mismanaged that economy, and they thought they could mitigate it by printing up trillions of their currency. No, all they did was that they turned what few products there were, into such an expensive venue that people couldn't afford it. It was insanity. See, real wealth doesn't come from expanding the money supply. Real wealth happens when you expand production, business startup, business formation, business development, more producers. You increase the stock of goods and services that people use, that lowers the price. You expand the wealth building capacity of the country through production. Okay, all the inflating the money supply does is increase the cost of these things, but doesn't increase the value of these things.
We've got about 30 seconds left. On the back to the issue of the silver market and the manipulation. How do you see this playing out? Do you think that the manipulation in the silver market is going to be finally ended?
If you've seen market action in the last few months, you may have noticed that those banks with their alleged activities have been greatly reducing their activities in the silver market, and you've noticed that the price of silver has risen to 30-year highs. And I think that if this is a lawsuit that is genuinely seeking to minimize this type of manipulative activity, you'll see a natural market come in place. And because silver is such finite worldwide supply, you'll see it rising and have overall a more beneficial effect on the silver market and the price of silver in due course.
All right, Paul Mladenovic, thanks so much for being on the Keiser Report.
Thank you for having me.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Paul Mladenovic. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.